So again, as I say, it's very tricky because if you look at the high frequency global growth data, it was clear that we had a really big smash in Q4 last year, but through Q1 it looked like the green shoots were building and it looks like growth was stabilising. And indeed, if you look at global industrial production growth, it looked like it was starting to recover. But of course, then Mr. Trump on the 10th of May increased the tariffs again. And the risk now is that that actually leads to, it at least delays the global recovery. But the risk is that we have a double dip, and if that happens, the most likely thing is that the equity market is stretched at the moment and comes back down in the second half of the year. If we get a trade deal, however, I think that sentiment will pick up quite significantly. Those green shoots will re-emerge, and global growth will pick up quite sharply in the second half of the year. So it really depends. Normally I tell people, don't worry about looking at the G-20, it's overrated. But at the moment, I think this meeting is just very, very critical.
Indeed. Okay, so navigate through the noise for us then, Ric. Given that situation that you've just described, the G20 is critical, we're watching the Fed and what that means for markets. What does it mean for investment strategy?
So again, it depends where you're looking. And again, it really depends on whether global growth comes back. So my working assumption, frankly, is that the market, particularly the equity market, is too optimistic at the moment. I personally think that it's very unlikely we get a really clean trade deal in Japan. And I think the risk of Mr. Trump increasing the tariffs more than currently expected is real. And if that were to happen, I think that bonds will continue to rally and equities will come off. But as I say, it is just very contingent on what happens. If there is a clean deal and the tariffs are removed, I think that bond yields will move higher and equities will rally. Probably the most likely outcome is that the tariffs that were put in place last month stay and they agree to do some more talking. Even in that environment, I think that the recovery that is being priced by equity markets is probably delayed. And in that case, I think equities probably come under pressure again.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to the channel for more. Thanks for watching.